Today on Forbes, why these Bitcoin miners are becoming summer's hot AI stocks. Energy has become the hot commodity in the artificial intelligence world. Take cloud computing provider CoreWeave, which in early June inked a $3.5 billion deal with Core Scientific. The agreement involves CoreWeave paying $290 million annually over 12 years for the Austin-based Bitcoin miners' data centers to host AI-related computing hardware. CoreWeave will also cover all capital expenditures. The deal was so good that Core Scientific's stock doubled to $10 in early June, leading some observers to view the company as the new so-called, quote, picks and shovels play for AI. On June 26th, CoreWeave announced a second contract, this one projected to bring Core Scientific $1.2 billion in revenue in the coming years. Core Scientific emerged from bankruptcy in January and is one of the largest Bitcoin miners in North America. The soaring demand for heavy-duty computer capacity is driven by AI applications such as ChatGPT. Its queries require 10 times the electricity of traditional Google searches. That immense power demand is putting a premium on companies like Core Scientific that have access to cheap power in states such as Texas and North Dakota, and agreements to tap more energy from elsewhere. Having sufficient power available now is vital when you consider that building high-performance computing, or HPC, data centers from scratch typically takes 3 to 5 years, with current wait times for electrical grid connections stretching up to 6. This according to the Lawrence Berkeley National Laboratory Research Center. Adam Sullivan, Core Scientific's CEO, says, quote, "The demand is insatiable. If we just execute on what is within our current contracted power today, we'd be a top 10 data center company in the United States, hosting a very significant portion of AI that's done in the United States over the coming years. We've been working very closely with NVIDIA and a number of different partners on the development and design of what's required to operate these chips." Since Core Scientific's announcement of the first CoreWeave contract on June 3rd, the aggregate market value of 14 US-listed Bitcoin miners surged by 22%, according to research by JP Morgan. This is a stark contrast to the 12% decline in Bitcoin and a 4% rise in the S&P 500. The 14 miners control about 5 gigawatts of power and can spare 3.6 gigawatts of that for high-performance computing, according to a June 24th research report by JP Morgan. They also have purchase agreements for an additional 4.5 gigawatts from new power plants in various stages of construction and permitting. That new energy is enough to support about 3.4 million households for a year, and it could come in handy. Driven by the AI boom, data centers' energy demand could surge to 9% of US power generation by 2030, according to the Electric Power Research Institute. This projected increase is more than double the current usage. But the miners cannot easily repurpose their excess electric capacity for AI. Wes Cummins, CEO of data center developer Applied Digital, says, quote, "Near term, power is extremely hard to find in large quantities, and that's the big asset a lot of the US Bitcoin miners have right now. But those power contracts are valuable if they have the other pieces that go along with it, primarily fiber connectivity." Cummins mentions fiber because fiber optic cabling is crucial in high-performance computing because it is what enables high-speed data transfers. Kevin Deed, an analyst at H.C. Wainwright, notes, quote, "Bitcoin purists will push back and say, no, you can't host AI machines in a Bitcoin mining data center. Okay, I get it, you can't. You need cleaner air and better cooling." But he adds that smaller AI players that may not have an appetite for quite the same computing and power provided by hyperscalers, that's companies with massive data centers and cloud infrastructure such as Amazon's AWS, Microsoft Azure, and Google Cloud, could better integrate with the level of service range Bitcoin miners are accustomed to delivering, which may ultimately lead to a Bitcoin mining HPC data center hybrid. There's evidence that investors agree. In a June 21st research note, Mark Palmer, an analyst at investment banking firm Benchmark, wrote, "Listed Bitcoin mining stocks have re-rated during the past 3 weeks as the value of the miners' power assets has come to the fore. The average enterprise value revenue multiple of a selected group of listed miners including IREN, TeraWulf, and Bit Digital, is now at 7.8x, up from 5.2x 2 months ago. For full coverage, check out Nina Bambasheva's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.